Okay. Hi and Assalamualaikum to all lecturers. For today, our group will present about financial and statistical analysis of the Pharma Biotech Berhad. Before we jump in details, I'd like to introduce myself and my group members. So my name is Nur Nadia, together with Farah Nur Zahia, Intan Nur Fasiha, Siti Nur Farah Nabila and Christina Kaida. So next, in briefing about the company, Pharma Biotech is a company that principally involved in manufacturing segment, which company produce pharmaceutical and chemical products, and the company is under healthcare industry. So next, I like to explain briefly about financial ratio analysis. So the first one is liquidity ratio. With the first one is current ratio. It shows a downtrend line for the 5 years in Dua Pharma. The company still able to meet the short-term obligations even it has poor liquidity level compared to the industry average. So after that is quick ratio. It shows that Dua Pharma has a good performance. So this indicates that Dua Pharma has a higher ability to pay without having to rely on the current assets. And for the net working capital, it shows that Dua Pharma has a good performance as the graph shows a uptrend. So this indicates that Dua Pharma are able to cover the short-term debt. So next, I will proceed to leverage ratio. So for the leverage ratio, it has three ratio under it. So the first one is debt equity ratio. It shows that Dua Pharma faced a downtrend line from 2015 until 2017 before the value is increasing in the next year. However, even the company faced the fluctuation, the Dua Pharma Biotech Berhad still has a good performance. So after that is debt ratio. It shows that an uptrend line from 2016 until 2018. However, in 2019, it started to decrease. So this indicates that Dua Pharma is better in managing their debt for its operations. So lastly, in time interest earned, it shows a uptrend line for Dua Pharma. So this indicates that Dua Pharma can pay for their interest when it's due. So we proceed to the next, which is activity ratio, which consists of four ratio, whereby the first one is inventory turnover. It shows that Dua Pharma has the uptrend line within the 5 years. So this indicates that the Dua Pharma has ability to use their inventory to generate sales, so it gets a high ratio. Next is average collection period. So for Dua Pharma, it shows that Dua Pharma has ability to collect the receivable according given period of time as it got a lower average collection period. So after that is fixed asset turnover. For Dua Pharma, it has the uptrend line. So this shows that the company is able to generate the sales from its existing fixed asset. And lastly is total asset turnover. Within the 5 years, it shows that Dua Pharma faced a fluctuations. However, even the company faced the fluctuations, the company is still able to manage its asset. So for the next ratio, Christina will explain more about the ratio.
I will explain about the profitability ratio. Profitability ratio have five consists of five ratio. That is, firstly, net profit margin. The parameter of this ratio is 7.81%. So over 5 years average, we can see that Duo Pharma has better performance in order to get profit from its sale compared to Top Glove, as Duo Pharma get 10.05%, while Top Glove is 5.91%. Then the gross profit margin for parameters for this ratio is 29.96%. Hence, the Duo Pharma is much better in management of the company compared to Top Glove Company, as Duo Pharma got 48%. Meanwhile, Top Glove is 14.63%. And then return on asset ratio, their parameter is in 7.41%. So we can conclude that Top Glove has a better productivity of the company's asset Then Duo Pharma as Duo gets 9.98%, meanwhile Top Glove have 6.83%. Next, the return on equity for this ratio is 13.12%. Thus, through top 5 years average shows Top Glove has a better performance in generating their return received on its investment of stockholders. Lastly, the operating profit margin for this ratio in the industry ratio is 11.3%, so it shows that the dual pharma is much better productivity on the company asset in providing returns, and also dual pharma received the higher ratio of averaging of 5 years, which is 12.62%, and Top Glove with 9.17%. Next, I will explain about market ratio. For market ratio, price earning ratio, um, the parameter of this ratio over 5 years average is 42.64. Hence, we can say that Top Glove is much better in giving high return to their stockholders compared to Duo Pharma, because the the Duo Pharma ratio over 5 year average is 9.76, while Top Glove ratio is 27.19. Then the earning per share for this ratio of their parameter over 5 year average is 0.0282 cent. Then the Duo Pharma, then we can know the Duo Pharma is much better, uh, as as he has as it has a higher profit related to share price, as then it will attract more investors to pay for these company shares. Um, the Duo Pharma results in their average 5 ratio is 0.12 cent, and for the Top Glove is only 5 cent. Then the dividend per share for this ratio of parameter is 0.06 cent, which is Top Glove is more better in distribute their company's earning to stockholders in regular basis, while Duo Pharma is not, because the Top Glove ratio is much bigger than the Duo Pharma with 7.57, and Duo Pharma is 4.59. And then for dividend payout ratio, the parameter is quite high for 81.82%. Then we can conclude that Top Glove is better in give more earning of company in dividend to stockholders, which the Top Glove ratio for average of 5 years is 51.8, and Duo Pharma is 40.95. And lastly, the book value per share ratio. This ratio precisely investor will consider a higher value of this ratio, uh, because if this ratio is high in value, the potential of having undervalued stock will high too. Hence, the Duo Pharma is better than the Top Glove with with 5.8, and Top Glove with 1.42, and the parameter is 4.505. And then I will proceed to Farah Nabila to explain risk and return.
Based on the table, the expected rate of return for its single investment is about 0.0847, which is quite higher from the market KLCI, which is a negative 0.0017. The reason why expected return for KLCI is negative is because the data from the KLCI for the first year of 2015 is quite higher than in the ending of 2019, which this affect the expected return for the KLCI. And for the top graph, the expected return is 0.1218 respectively. So now we will move on to the standard deviation, which is to calculate the risk of the company. Based on the table, it can be seen that the variance for dwarf pharma is show a higher risk, which is about 3.2561 compared to the market that is about 0.3237. Now we will move on to the covariance. For the covariance of dwarf pharma is 0.2169, that it shows that it moved together with the market. However, for the top graph, it shows the negative value, which is negative 0.2589, that is totally inversely mannered from the market. Next. So now we will go to the regression analysis. It shows the regression analysis between the return of stock, which is dwarf pharma, and the top graph with the return on market, which is the KLCI. Based on the simple regression dwarf pharma and KLCI, it shows the positive relationship between the return on stock and return on market based on the equation y equal to 0.8585 plus with 0.6711. However, this is vice versa with the return of the stock, top graph, and KLCI. Next, for the coefficient of correlation, it shows that dwarf pharma stock did not have a high influence or the strong relationship in the stock market KLCI, as it only gains about 0.2116. It same goes with the top graph that only gained also 0.08725. Next, we will go to the coefficient of determination. Coefficient of determination of return of stock for dwarf pharma is 0.0477%, which means that the coefficient of determination have a low impact of the company performance to the model, which is the KLCI. This same goes with the top graph and the KLCI too. Next. The security market line. The security market line, the graph shows the relationship between the dwarf pharma and the top graph and their own market return. In this figure, we can see that dwarf pharma actual return is 5.8662% by using the beta 0.6711 compared to the KLCI market beta, which is about 1, and the expected return is negative 0.0017%. For the top graph, the actual return is 0.2977% and the beta is negative 0.7996. By looking at each of the stock beta, it shows that dwarf pharma have the higher beta to 0.6711. Now we will go to the next presenter, which is Christina Kaida, that will explain about the conclusion of the security market line.
Okay, I will proceed to the conclusion from security market line. To be concluded, all the company shows an undervalued result when comparing with the market return. With this figure, it tells that all the value is higher for each stock based on the actual return. The pharma record about 5.8662% of actual return, which is much better than the market. Thus, the company stock is so valuable for the investor to buy because the result is undervalued. As you can see, this intrinsic value is a measure based on a financial model of the value of an asset. Investor will focus on intrinsic value in order to know that overpriced or underpriced situation of a company, with comparing the intrinsic value and the market price value, resulting the dwarf pharma company is in the underpriced situation, which is good, so investor can start buy the stock company while the future investor can enter the market. Then I will proceed to Farah Zahia to explain about technical analysis.
Next, I will explain about technical analysis. So first one is comparative analysis. So this is the comparison performance chart of FBM KLCI, healthcare industry, and also Duo Pharma Biotech Berhad. So as we know, KLCI is functioning as an indicator of global economy scenario of the country. Healthcare industry is outstanding in economy better than other sector. Duo Pharma is following the trend of healthcare index, but still not exceeding the performance of healthcare. Means that the factor that affecting the healthcare industry will also affect the company. The well performance of healthcare is due to the pandemic of COVID-19. Demand for healthcare products such as medical equipment, glove, supplement, and face mask is increasing. And next, we will continue to the Duo Pharma trend line and also their price pattern. As we can see, the primary trend line for Duo Pharma Biotech Berhad is uptrend, which is bullish. The trend started as 21st July of 2020 after the runaway gap until 18 December of 2020. The secondary trend line in the beginning of September is a downtrend as it was the correction of the price movement. Even though our trend line is bullish, but by the end of our research, there are a forming of a triple top. The triple top is identified when the stock price create three peaks at nearly the same price level. So, we are not suggesting investor to enter the market as we expect that the price will start to decrease as triple top market, as triple top is a bearish reversal pattern. And next, we will move on to the technical overlay. So the first one is simple moving average of 30 days. 30 days is the short-term SMA. Usually, trader or analysts use SMA 30 to signify buy signal or sell signal. The first buy signal in the chart is on 12 June 2020. Buy signal occurs when the price crosses above the SMA line. The buy signal is continued, but on 4 December of 2020, there are a selling signal as the price is crossed below the SMA line. The traders should not enter the market. And next, for the simple moving average 100 days. So simple moving 100 days is the long-term SMA. So long-term SMA often used to forecast the cost of the market. So either it going to be bullish or bearish. On 22nd April of 2020, the long-term SMA gives signal the beginning of an uptrend and it lasts until the last date of our research. The buying signal might occur because of the important roles played by Duo Pharma Biotech Berhad for making pharmaceutical product during this COVID-19 pandemic. And next, the double moving average. So there are 30 and 50 days, which is 30 days is for short-term SMA and 50 days for the long-term SMA. So the double moving average is used to determine the golden crossover or the death crossover. Referring to the chart, the first crossover is on 14 July 2020, which is the golden cross. Golden cross is a buy signal where the short-term SMA line cross above the long-term SMA line. The bullish trend is continued, but at the end of our research, on 22nd of December on 2020, there are a bearish signal, which is the death cross. The existing investor should not enter the market and they should sell the stock immediately to bear any bigger loss. Next, the presentation will go to Intern Fasiha.
Will be continue to explain about the technical indicator. So usually the investor use the technical indicator to forecast entry or exit signal. There are few types of technical indicator, including the moving average convergence divergence. This indicator consists histogram and two lines which are MACD and signal line. When the MACD line cross below the signal line, it shows sell signal. Based on the chart, it shows Three Pharma MACD on 18 December 2020. It tells the existing investor to sell the stock as the MACD line cross below signal line. For potential investor, they are not recommend to enter the market. Second, the RSI, Relative Strength Index, this indicator used to determine whether it is overbought or oversold level of security. So, the entry signal for this indicator when the RSI reading fall below 30 line and move up to cross over the oversold region. By referring the figure at the end of the price chart, it shows buying or entry signal. It tells the existing investor to hold the stock and wait for sell signal. For potential investor, they can enter market as it shows buying signal. Next, moving on to the rate of change, ROC. It measures the momentum oscillator between the percentage of current price and previous price. When the indicator crosses below zero, it indicates sell signal in overbought condition. On 18 December 2020, it shows exit signal as the indicator crossed below zero. So, potential investor, it suggests to hold their decision and wait for buy signal at this point. For stochastic indicator, it is a leading indicator known as oscillator because it has limited range. Based on the price chart, neither stochastic line cross oversold or overbought region. So on 18 December, existing investor can sell their stock and potential investor are told to hold their decision from the enter the market because the price quite high during this point, since there is no crossover in overbought or oversold condition. Lastly is Williams indicator. When the RSI above the overbought region and falls below negative 20 line in overbought region, it indicates sell or exit signal. But there is no crossover in oversold or overbought region. So at the end of price chart, it tells existing investor to sell their stock. For potential investor. It told to hold their decision to enter the market because the price quite high during this point. So if a new investor enter the market, they might bear loss. Lastly, for the conclusion and recommendation for technical indicators, the table number 1 shows the value of indicator to indicates the entry and exit point. However, the recommendation for existing traders are to sell, but the potential investors are not advised to enter the market during that time due to high level of stock price. The change in price drastically because the market is conquered by buyer. So the demand is more than supply, will sending the price higher or the price trend is uptrend. Next, by refer to table number 2, the technical indicator or technical overlay indicates strong sell for existing investor and potential investor are advised to not enter the market because the trend become bearish and there is falling in price on 18 December 2020. Lastly, the table number 3 is given the summary for both position for existing and potential investor, whether they need to buy or sell or hold the stock. The technical indicators suggest existing investor are advised to sell, while the potential buyer should not buy the share. To be concluded, we recommend the prospect investor to hold their decision from enter the market because the price predicted bullish in near future and there might be a loss. I think that's all from us. Thank you and Assalamualaikum.